Hi, my name is Alex Carlucci. I'm with Dale Allentunny from Gust and Show Associates with a special guest who's always a guest lately, Eric Jeanette. He's with Dream Home Financing and FHA Lenders. Today's topic is why do these loans fall apart in process? And the reason we're going to talk about this today is because if you see lately, a lot of loans are falling through, and it's one of the highest fall through rates I've ever seen. And there's many reasons. There's probably 100,000 reasons, but we're going to try to cover as many as that we can think of. But what I'm seeing lately is it's all over it's not just me. I have friends of mine in the business. There's stories on Redfin. There's stories on Zillow. 250 listings in this area, 100 under contract, 50 closed. So it's happening everywhere. It's not my fault. I thought it was something to do with me, but it's not my fault, and I'm glad to see that it's happening to other people too. So I want to start. Hey, I started
Alex,
thinking
Alex,
it was
do you
me.
feel better?
Yeah, I feel so much better. Yeah. So let's go into so we're going to talk about buyers and sellers reasons. So I'm going to start with some buyers, and I can't, this is some ideas I came up with on the fly, but there's sellers' faults too. It's not always the buyers. Sometimes it's the mortgage broker's fault. There's so many different reasons. It could be the real estate agent's fault for knowing that the house had a crack in the basement, that the house was going to fall down, and they still sold it and think it would get away with it. So there's tons of reasons why a house falls through. Realtor's fault, mortgage broker's fault, buyer's fault, seller's fault, underwriter's fault. You never know. It's just, there's so many different reasons. But let's go over some of the common ones. And I want to start off with the thing that the mortgage broker can't know really unless the client is completely honest, or even the client knows what a background check really means. So they run these things called LexisNexis or Fraud Guard. There's so many different names to what they do, but it's a background check that not all loan officers are privy to. And that's where they find a lot of things out about you. They find out that you own other properties. So if you didn't tell me you own a property and you have debt on it and you have tax returns that show losses on it, and you don't tell me that, and the underwriter finds that you own a property, I'm like, oh, now I need your tax returns, and now it shows like $50,000 losses. That comes right off your W-2 income. So they find that you own properties. They find that you're self-employed, that you own a business. So they find if you have IRS debt. They find if you have child support, you're divorced. They find if you're in a lawsuit. They find judgments against you, all of it. So these background checks is one of the first things they do in the very beginning. It's usually done in the first underwrite, not always. And that's something the loan officer is not going to know about. Do you guys want to say anything about that?
Yeah, they'll find if you've been convicted of a crime too.
Yes.
All of those things, which, there's some questions that you have to truthfully answer during the process.
Yeah.
You got to be you have to be transparent. You have to fully disclose.
Right. So, I mean, and those things can kill the deal right away. If you owe the IRS 100 grand, you're not on a payment plan, we got to close in 30 days. I can't close it because you have to go on a payment plan, and conventional is 1 payment, FHA is 3 payments. So we can't get that done in a 30-day process. So there's a lot of things these things will kill it. Child support, that's debt I didn't have against you. You're self-employed, you got losses that come off of your regular income, and now you don't qualify. So that kills the deal immediately. I have so many times said, oh my gosh, they found this deal's dead. I'm sorry. It's like dead right there on arrival, just immediately dead. Daily, right? Just
100%. Yeah. There's no turning back from that.
Yeah. So you're not helping yourself by not telling me something. You're better off telling me something. I say, let's take a chance. We'll take a chance.
Now, Alex and Eric, I have helped people who've had problems in the past. Maybe they got into some kind of trouble, 20 years ago or whatever, when they were, young and dumb, as like my parents used to say to me. That can be forgiven and understood, but you got to be honest about it up front.
Yeah.
Right?
Yeah.
Yeah.
Absolutely.
I mean, you have to be honest about it. It's not an automatic denial, but you start covering things up and not disclosing to us, the loan officers, what we need to know so we can do our job. You're only asking for problems later in the transaction. Like Alex said, something comes up, there's no turning back from it.
I think your loan officer in a mortgage and, home purchase or refinance transaction needs to be looked at like your attorney if you're going to court. You got to tell your attorney everything, so your attorney knows how to defend you, right?
Yeah.
And the same goes for your loan officer is on your side. They're trying to help you get through the underwriter. They're with you. The loan officer is not going to make any money unless you close. So they're going to do everything they can to help you close. So you got to be upfront and honest with them so they can do that.
And just so you guys know, what you might say, why didn't you ask me these questions? If I was the person to ask you every question that could possibly go wrong, you would say, who's this annoying guy? There's 1,000 things that I'd have to ask you. So when we're talking to you, we do ask you questions that could lead to you opening up about some things. So there's no way we could ask you all the questions that we would have to. We have to get a feel for it. We have to throw some things out there and then follow up. It's too hard to put a list of questions of everything that's ever gone wrong on a loan and ask every customer I talk to those questions. It's just too much. So there's some honesty that's needed from the client. Right?
Yeah,
Yeah.
absolutely.
Yeah. And I think one of those things that happens is, if the client is not honest about their employment history or their current employment, those kinds of things,
Yeah.
then, it's just gonna be revealed in the end what the,
Right. So
what the truth is.
that leads me to the next section. The next section of questions events are probably the mortgage broker's faults in general, but it's the way the client answers them too. So sometimes when I get someone's pay stubs and W-2s, it's not very clear what they make. It's very complicated. You see, sometimes they're working 36 hours, sometimes 40. They've got some line items that look like overtime or some kind of bonus or some kind of weird type of pay that I don't know, and I have to ask those questions. And I don't get to see their pay stubs from a year ago when some incomes have to be averaged, and I have to trust that they earned it last year too. So for example, if you make overtime and your overtime in 2023 was 50,000, and I say, what was your overtime in 2022? Because they're going to average it, and then they tell you their base, and then they tell you what their overtime probably was. You look at the W-2, you can guess, but you never know if there's something else in there that got that W-2 to there. So you have to trust everything that they're saying. So if they say 20,000 in 22 and 30,000 in 23, then I average that. You have a $25,000 per year overtime. But what happens when we order these verification employments and we find out it was 5,000 overtime the year before, and they had maybe a $15,000 bonus that they didn't have in 23, and that's what brought the W-2 up, and it made sense what they were saying. So that's a mortgage broker's job to pull that out of you, and if they doubt it, they should order a verification employment before they pre-approve you, which is kind of complicated because you got to get a borrower's authorization, you got to send it to their employer, you got to wait for it to come back, but that's the right way to do it. The holy grail of income is what's called a verification of employment that your employers for the last 24 months fill out. So if you got 5 employers, we have 5 verifications, and there's different rules for each line item of income. There's base salary, which you can always use. There's commission, there's bonus, there's overtime, and there's other. So go ahead, you guys, you want to comment on that?
Well, Alex, I don't always get it, but I always ask clients for their year-end pay stubs from the
Yep.
previous 2 years to try to get a handle on the things that
Right.
you're saying, because it gives us those line items you're talking about, and we can calculate our averages in addition to the base income.
Right. That's one of the reasons loans fall through, though, because sometimes we're busy as loan officer and we're just excited we got a deal and it makes sense, and you're just really trustworthy with that person because everything looks pretty clean, but you make that mistake. You didn't do the extra step, like Dale does. He got the pay stubs. You don't do it. We're hasty sometimes. We just, right, Dale?
Right, but another thing that, yes, but if they're not under contract and they're obviously motivated to get a house, I try to run them through underwriting prior to them getting under contract. So if anything needs to be confronted, we can confront it.
Right.
Yeah, and since you said, Alex, that sometimes loan officer just wants a deal and they, don't do their due diligence. I've seen where, actually gotten phone calls from people that come to us because the last person they were dealing with at some other company tried to push their loan through and do a Hail Mary, like get an exception for the bankruptcy to Chapter 7 waiting period or something, right? Where they led the client to believe that, oh yeah, this is not going to be a problem. And then they're 3/4 of the way through, and now the loan's not going to, they got denied,
Yeah.
So sometimes the loan officer, even if they're not experienced, they don't prepare the file properly and don't ask the right questions up front, like you talked about earlier, and then it ends up going sideways because now they need a loan that lender doesn't offer. They need a non-QM or something else at this point.
Here's the next one. So job gaps, and that's a really hard one for a loan officer to know without all the verification of employments also, because let's say you have 3 W-2s in the prior year. I can't tell if you had a gap. I can look at your income and say, wait, that W-2 seems a little light for last year. If you worked there for 3 months, it's a guessing game. And then you get the verification of employments. You find out the person had a 6-month job gap and they're not back on their new job for 6 months. FHA is not going to do it. So that's us getting burned, trusting you, looking at things, maybe not, getting the message to you how important this question is. But that's a mistake that loan officers can make on you. It's not a mistake. It's hard to determine. That's my opinion.
So, Alex,
It happens.
like what you're saying, and some people, maybe it's not an intentional
Right.
deceit, but it's the lack of attention to detail. We really have to drill down on some things.
Yeah. And that question in particular, I can't tell you how many times I've been on the phone with someone and, they indicate that there's some kind of a inconsistency in their employment. And now I say, okay, starting from today, let's work backwards. When did you start the job that you're in? And then, inevitably, as you're going backwards, they try to tell you a little bit of a story and they get off course. I'm like, no, let's get back to this. When did you start this? Okay, now how long, when did you finish the job prior to that? I want the date, so you can actually figure out what this gap is. And it sounds like you're giving them, like Jerry Seinfeld said in one of those episodes of his, the financial equivalent of a full rectal examination, he said, is what an audit is, right? And it sounds like that's what you're doing by asking this line of questions.
Eric, this is rated G. This is a G channel. We're rated G.
I didn't think that the young kids were interested in this kind of topic. They're all asleep now. But the point is that, you have to ask these very specific questions, and they might get a little spooked by the detail that you're asking, but you have to, because if you don't, and then you find out later, and then the loan gets denied, they're going to be looking at you at that point.
Well, Eric, you had a great example earlier. Imagine us as your attorney. You got to fully disclose. We are on your side, but we also know what the reality is too, right? So let us sift through all the, positives and negatives and see if there's, potential there for you to qualify. I mean, that's what it comes down to. You have to disclose everything to us. You put yourself at a disadvantage if you don't.
So here's one that got me recently, you guys, and Dale, and I think you'll really understand what it probably could have happened too. I got a guy who's been a car salesman for 8 years. He worked, I'm just going to make up names. In 22, he worked 22, and part of 23, he worked at Toyota. And for the last 9 months, he's been with a new dealership. And I looked at his W-2s from 22, and I looked at his year-to-date commission in 23, and everything he was consistent, right? So I pre-approved him. Thank God it was a refinance. Submitted it, got the VOEs back. He was a salary car salesman prior. He does not. You need 1 year commission now, and he had 9 or 10 months of commission right now. He was a salary car salesman. I thought all car salesmen were commission. And I made that mistake, and that's my fault. That's an honest mistake that would have got some of the best. I think I'm one of the best, so it got me. I'm just kidding.
Alex, so that's still a deal in a couple months, right?
In March, yes.
Yeah.
When he has 12 months of commission. It used to be 2 years commission, but they just changed it to 12 months commission.
You got to call him in 2 weeks.
Yeah, I have a purchase going right now where he's 12 months, just hit his 12-month anniversary as a car salesman.
So here, Eric, this is more detailed than this. Here's another reason a loan could fall through. So if you have to wait until his 12th month exactly, of earning that commission, and then you have to start the application the next day. If you order the case number prior to that,
Oh,
the
for FHA, yeah.
FHA, the deal's no good. I have to
Yeah.
be very, very
Right.
careful on that.
Yeah, the same thing with you know, the seasoning, if you're going to try
Yeah.
to do a cash out refi. I mean,
12 months, yeah.
Also the bankruptcy waiting period, you
Right.
gotta wait until
Right.
one day after the 12th month before you order the
Right.
case number, all that stuff.
And that's
Yeah,
another reason deals fall through, because they don't wait for that, and then you order the appraisal, it just becomes real messy. It
yeah.
becomes messy. Yeah.
I've got one that's been around forever, regardless of, you know, this current environment or not. It's happened to me a couple of times, and I constantly preach it to my clients, but it, you know, it still stings from the past. You get a client at clear to close. Hey, Eric, you're clear to close. You and your family are going to be in this house in a week. Then you go out and buy a car after I
Oh,
told
yeah.
you you're clear to close. And the lender, before the closing, will
Pulls the credit
find out,
again.
as Alex said earlier, LexisNexis, they will find out. Now your debt ratio is out of whack. No house.
So I'll check that one off the list. That's on my list. So people buy.
That was on my list too, yeah.
They do it before the clear to close, and you get
Yeah.
caught.
What about after the clear to close? They could still catch it before closing in
Yeah.
that gap there.
Yeah.
I've had that happen.
So here's the good thing. FHA generally doesn't do that. They don't monitor your credit, but VA and conventional do monitor. They do a soft pull. They have soft pull monitoring. Now FHA, most of our investors do not do that. So thank goodness. So
I don't recommend anyone taking the chance
don't
until you have
take
the
it.
keys in your
I
hand.
agree. I
yeah,
agree.
if you need to buy a car, wait until after you buy the house.
You have
Just-
to get those keys in your hand. Yeah.
If you plan on buying a house in the next 6 months, hold off on the car. Take Uber.
Yeah.
Absolutely.
Yeah.
People can't help themselves though. It's
Yeah, I know.
unfortunate.
It hurts your
you know,
DTI. It drops your score.
how many times have you spoken to someone they just talking to you for the first time and like, yeah, I just bought a car last week.
I know.
Really?
I know.
Like,
I know.
and now they just $500, $650 car payment too. Just crushing your approval amount, you know?
Yep. Yeah. Your purchasing power just went plummeted, right?
Yeah.
Yeah.
No,
It's amazing.
I hate the cars. Yep. And nowadays cars are $1,000 for the average car. So it's big.
How about Alex? How about this? Have you ever had anyone make a job change during the middle of a purchase transaction?
Yep. And I've had them switch to a 1099. It's dead immediately.
Dead deal.
Yeah.
They
Right.
switch to
Yeah.
a W-2, it just delays it. But don't
Yep.
switch jobs. Don't buy cars. Just lay low. Don't breathe. That's what I tell you.
Yeah. Don't even eat any.
Exactly,
No
like-
food.
Yeah, you're eating ramen soup and you're not leaving the house and you're not buying a thing.
Right.
You should be intermittent fasting when you're buying a house, basically not eating, you know?
Right.
No,
Yeah.
people switch jobs. Like Alex said, they switched to 1099. And I'm like, yeah, you got to wait 2 years now, you know?
Yeah.
It's okay going the other way.
Right.
That's
1099 to W-2.
Yeah.
But
Well,
you
yeah,
know,
once again, talk to us before you make a change like that, you know? Accept the job offer after you buy the house.
Yeah.
Oh, the other thing is this is not necessarily killing a deal after the application sent in, but right before, some people feel like they need to take whatever money they have and pay off things, right? And now it may not have really helped their credit, but now they just burn the cash they need to finish the deal.
Yeah.
So,
And that's
I've
one of
seen
my
that
biggest
happen.
advice. Don't spend any of your money without talking to me, because maybe it's better to have the money in the bank than to buy the debt down. Or money in the bank, you can't get it back. It's the most powerful thing to make it approved, to get a thing approved or to get to the closing table. And once you spend it, it's gone, and you may not have spent it the right way. So before you spend money, let us analyze it, because these computers are very sensitive. If you don't have $1,000 left over in your bank after you close, the computer will deny it. And I didn't realize that because I didn't run it like that. I just ran it the way that you guys told me you are. We get to the end, and then it turns out you got $300 left over after you close, and it denies it. And I go back and I look at my approved eligible. I'm like, it approved it before. And then I realized it takes a while to figure it out that you had an extra little bit more money in the bank when I ran it before, after the closing. So we have an estimate of what the closing costs are and how much you have left over. and it approved it. And now when reality hits by 30 days later, you have a lot less money in the bank, and now it denies it. And those funds aren't usually giftable. You can't really get a gift always to make up for that. Sometimes you can, but not always.
Yeah. If you're better off keeping the money and having someone else help you pay off a couple of these bills instead of giving you the gift or something.
Yes.
You know?
If
Yes.
we're not rapid rescoring, you don't spend the money, it's not going to help you. If we're not going to
Right.
rescore that, it's not going to help. Just talk to your loan officer about, hey, I want to pay this credit card off. Let's make sure it's okay, first. So
Yeah. Or your loan officer might want you to, not sink it all into one credit card. Maybe you spread a little bit around, so you're dropping your
Usage.
balances, your usage, instead of it, and because you could pay off something completely and your usage is sky high on 2 other cards, you could have been more strategic about it and
Yeah.
knocked all 3 of them down.
right.
So there's just a lot of things that consumers are not aware of, and that's why, like you said, you're better off not doing anything until they speak to someone like you or
Yeah.
Dale or myself.
So the next one I want to talk about is money. We come up short. In the beginning, it looks like you had enough money, and then when the end comes, you're short, and that's why deals fall apart. And again, sometimes a gift is not allowable. It's maybe a type of thing where the gift funds don't make it work because the computer approved you when it's all your money. So
Right.
be careful. And then sometimes it's our fault. Sometimes you go out, you get insurance and you're in Florida, and I estimated $1,200 a year, and now it's $8,000 a year. That's my fault for not saying, hey, it's gonna. So a lot of things blindside you, and the people don't have the money to close when it's all said and done. That's happened many times, that there's not enough cash to close, and a lot of times gift funds are a solution, but sometimes they're not. So does that happen to you,
Yeah.
Dale?
Well, it
Eric?
has. Now, I've had people who can get gift funds. You got people with elderly parents who keep cash around the house or whatever, and they couldn't source that. I would tell my clients to just continue to let your payroll deposits accrue and try to live off the funds that the family member is giving you. Yeah.
That's a great.
And just let it let your direct deposits pile up in your bank account.
Yeah, but it will
But
delay the closing. It delays the closing.
yes.
Yeah.
Yeah. Right.
Sure.
Exactly.
Yeah. So like you mentioned with the insurance in Florida, it's the same with taxes. So I don't know, you guys could share how you handle that, but you can look up the current taxes on a
Sorry for that little skip in our little video there. We had a little technical difficulties, and we're back. And we were talking about not having enough cash at closing, or how to get cash if you were short to close. And I wanted to add something to this discussion. That mortgage brokers do make this mistake. When you get 2 months bank statements, you're supposed to comb through those bank statements and look for any cash deposits, because cash deposits are no good. So remember, cash is king in Vegas and maybe some other places at a car dealer, but it's the devil in the mortgage industry. Do not put cash in your bank. If you're going to get gift funds, don't let it turn to cash. Cash is the devil. So if we see cash deposits in your bank statements, we back them out. So if you have $10,000 in your bank, but you have a $3,000 cash deposit in the last 2 months, because that's what the underwriters look at, you have $7,000. Now it gets worse than that. If someone gave you $10,000 cash and you had $10,000 in your bank account, and then because they gave you $10,000 cash, you spent that $10,000, the underwriter doesn't think that you spent your cash. You spent your clean money, and now you got no money left over in your bank. So you had 10 of your own, your friend gives you 10 grand, so now you got 20. You spend 10 grand because you got that easy money from your friend. We're just talking about before you even apply for the mortgage. And now you got 10 left over, but the underwriter is still going to back out that $10,000 cash that was deposited. So now you have zero money. So it works against you in many different ways. It's hard to understand what I just said, but cash is bad. Do not put cash in your bank. And mortgage brokers make mistakes in not looking through bank statements because they're busy. And if you make that mistake, you're going to find out that the hard way that when that money gets taken out, you're scatterbraining trying to find cash to close.
Well, Alex, let's talk about, though, the self-employed borrower who consistently is depositing cash in because that's kind of how they're getting paid, but they've been doing it for months, and it's not a one-off situation.
It's something that really is hard to get through. It has. So I did a loan for a waiter who got a lot of cash tips. The underwriter said, no, that's cash. Even though they're a waiter, every twice a week, there'd be a $300 deposit. Of, you have to find the right underwriter, but go ahead.
All right, but what if they actually report that cash every year on their taxes?
Then maybe you're okay. Look, that's a gray area you're talking about. You're gonna
I know.
Yeah.
I know. Yeah.
You're
No,
better off.
both
Yeah,
of
go
your
ahead.
points are valid. Like, you got a waiter and he actually claims that he makes $50,000 a year, he or she, and there's deposits rolling into the bank account that would substantiate that. It's still difficult when it's cash.
Yep.
My take on it, which is not necessarily how an underwriter would do it, and of course, it depends on the underwriter you get and what side of the bed they woke up on that day. But if someone's actually willing to pay taxes on money they didn't actually earn, that's a long shot.
Right.
You know what though? We know this through our licensing courses that we take every year.
Yeah.
I know what an underwriter is worried about when they see cash flowing through there.
Yeah. It's money laundering.
It's money laundering. Yeah. Or that's what they're worried about anyways. That's what they're protecting against.
I just want to say avoid cash at all costs. Don't put us in that predicament. We have to talk an underwriter into using it because it's very hard.
Right. Just like don't take the chances of buying a car. Don't
Yeah.
take the chances of depositing the cash.
You got
Right.
cash in your safe, put it in your bank right now. Let's wait a few months. Do not.
Alex, I want to add one more thing. I've had somebody a couple of years ago, I had a guy when the whole car market, when there was very little inventory, he sold two of his nice used cars and he got above ask at the dealership, above the blue book. And he put those large deposits in his bank account, but he did have the bill of sale and everything from the dealership to validate where the funds came from.
If the dealership gave him cash, I guess that's a tricky one.
Well, they didn't give him cash; he deposited it. But I mean, still, you got to really be able to source.
Oh yeah,
those kind of. You have to source it.
Right.
You can't say my buddy Alex, bought my, Ford Fusion out in front for 10 grand, and there's no check or anything.
If you sell a car, get a check.
Yes. Or any other ad, get a bill of sale because they're going to want to see it.
Take a check. Don't take cash.
Yep. Yep.
All right.
Absolutely.
Well, I got another quick one. So more closing costs. We kind of covered that with insurance. So if we estimate your closing costs at $8 grand and you got $8 grand in your bank plus the down payment, we pre-approve you, and then your insurance turns out to be $5 grand more, then we're in trouble. Other things happen during the process, like you might get flood insurance. That's like $2,000 a year. That could throw it off a new type of cost. There could have been some transfer stamps that we missed, but that's dangerous waters. But there's always weird costs sometimes associated with buying a house that we may have missed up front, and that could hurt the deal. That's very rare, but that's a small one that does happen here and there. But the insurance, no question about it, is a new thing. Insurance rates are going through the roof, and that's something that we have to be aware of in the beginning. Nowadays, I don't even know what to put for insurance anymore. I used to put $100 a month. Now I'm putting $150. I don't even know what to put on the estimates anymore.
Here's one. Here now, on a lot of our deals, we structure the contracts with seller paid closing costs.
Right.
And this right now is not an issue because housing values have remained solid, very steady. But if you're, if you got a deal where you're getting $10,000 from the seller and then the house under appraises, you're going to lose that credit more than likely because the house under appraised.
There you go. And now you don't.
And now you got a bottom line issue and you don't have the money in the bank.
That's a good point. That's a reverse. Yeah. That's more cost.
Right. Right.
Yep.
So
And
you,
what about, go ahead. I'm sorry, Dale, finish your thought.
no, you planned for it. It was, you planned around the 10 grand. Now the house came in at 370 instead of 380. Now you got an issue on your bottom line.
Yeah, the seller's probably gonna split it with you, maybe 375
Maybe.
purchase price, we'll give you
It-
5 grand seller credit.
Right. They might split it to make the deal go, but they're not going to give it all up.
Right.
Yeah. So as we're heading into sellers now, right, you could have a situation where the seller changes their mind and decides not to sell, and you got legal issues potentially with the contract that you got to
That's a
deal with.
breach, right? That's a breach.
Right, right. But also, as the buyer, you could have the inspection, and it reveals all these things that the seller refuses to fix. And then you could, at that point, the deal could be killed because you're killing it, because now you don't like it as much anymore.
Yeah.
Because you found out that, you know, right? And you kill because to make credit.
Probably the little killer that I blame the sellers every time for, because they know their house, and you know, the realtor knows their house. The listing agent knows it's not going to go FHA, or the listing agent knows that the inspector is going to find this nasty thing that the buyer's not going to want the house, and they've put you through it. I start the loan, I submit the loan, we disclose the loan, they get approved. Next thing you know, then the inspection comes back and the whole thing's dead because 50,000 repairs are required. And this is the 4th time they've sold it in the last 3 months. And it's like they know.
Yeah.
You know.
Right. Right. Yeah, absolutely. Now, listen, I had the sale of my first home. We had septic and well, and we had the inspection, and the septic inspector, they hired a separate septic inspector, failed the septic, and he just failed it because he wanted to get paid to do the repair. There was nothing wrong with it. So I refused to make the repair because I knew there was nothing wrong with it. Then I had another buyer 2 weeks later, they had an inspection and it passed.
Right.
You know, so, you know,
Crazy
but
world we live in.
let me ask you this, FHA aside, let's say conventional, do you recommend that the buyers get the inspection first before paying for the appraisal?
100%.
Oh yeah.
If there's any concern, if there's no concern at all, I've had realtors say there's nothing wrong with this house. I go on the internet, it looks great. We want to rush. If it's California, they want to close in 17 days. I'm all aboard as long as the customer knows that, you know, if there's something wrong with the house, you're going to lose this money. That there's nothing wrong with the house. I'll do it, but I have to be told to do it. I have to, you know, go out of my way to do it that way. Sometimes I've had inspections that were like a week later because somebody couldn't let them in or the buyer couldn't make it. And those times are a little dicey. I don't like waiting a week to order the appraisal, but that's rare.
Right.
That's a case by case basis how I handle that.
Yep. Yeah.
Me too. My preference is to let them get the inspection done first, then order the appraisal. But like Alex said, if you are on a real big time crunch and there's other buyers lined up, then you have to have a conversation with your buyer. You know, it's a little bit of risk.
Let me tell you what an inspector, you know, I've had inspections scare my buyers away, and I've had people, you know, happy with the inspector, but the appraisal failed. So the inspector's there to like really terrorize the house. They spend 4 hours there, and you're really supposed to look at the big things. You're not supposed to say, hey, the knob on my stove, it's got a little scratch in it. I can't read the 400 for my oven. You're not supposed to nitpick that kind of stuff. You're supposed to say, hey, the roof's gonna fall on your head, kill you. You got mold everywhere. The foundation's sinking, and you know, major stuff. You know, the furnace doesn't work. The air conditioning doesn't work. Stuff like that. So I've seen inspectors pass, you know, give a decent inspection where the consumer's like, okay, there's nothing major wrong. Then the appraiser goes out there and says, oh, you got chip paint, you got a missing shingle on the roof, and you got a loose, wobbly, you know, deck, and all that stuff has to be fixed. Now, if those things add up to be a lot of money, the sellers won't fix them and the deal dies. So you can pass the inspection in terms of getting by the inspection where the consumer's happy, but then the appraiser's not happy. So an FHA inspection is very tough, and they find things that have to be fixed. And I'm not blaming inspectors because I don't want inspectors to kill my deals. I really don't. So I'm glad when they don't, like, just kill it every time. So
Yeah.
it's a kind of a tricky little situation you get into.
Now, if they're being recommended by the agent,
Yeah.
then they will probably not go overboard and scare the crap out of the buyer, because if the agent realizes this inspector is killing his or her deals constantly, then the referral train stops.
Yep.
You know, so it's a
So the
game.
main point of this is for the people out there is um really look at the quality of the property, because that's a real big deal killer. I start so many deals and kill them because of the condition of the property, and it costs the borrower $350 for the inspection, and if the appraisal was ordered, God forbid, and then it just wastes a lot of time. So try to be your own inspector, I guess. Try to, like, do the best you can, and I don't know, really trust your realtor. The realtors, I think that they know better and they're not telling their clients sometimes.
Yeah, and look, if you really love the house because of its layout, location, maybe you're on the water, and you really love it, and you're okay dealing with the repairs, but you need to go FHA, then just talk to your loan officer about, see if you can get pre-approved for a 203K as a backup to make
Which
sure
is a
that
which is
that'll
a
work.
rehab loan, which is the
Yeah,
rehab. Yeah.
yeah. So with the 203K rehab loan for FHA, the repairs don't have to be made by the seller. They can be made by you after closing. You have 6 months to make the repairs, and you'll be given the money along the way as you're making the repairs, and it goes on to your total loan. So the way around it, it's not just repairs. I mean, let's say you want to change a lot of things. The home could be, from an inspection standpoint, perfect, but you don't like the wallpaper. You want to get rid of the carpets and sand the hardwood floors. You want to do landscaping. You want to pave the driveway. Like all these things that you want to do, the 203K rehab loan is a great product, and it can overcome some of these issues that we've been talking about with the finding things with the home that'll kill the deal. It doesn't have to kill the deal with that loan.
I've had some deals fall apart when storms hit during the process, and damage was done to the property. So I've had some weird things like that happen to me. That's very, very rare, but I have to mention it.
Yeah, and I have a personal story on that one too. So back in 1990, my parents were buying a house at the shore, at the beach in New Jersey, and they were a week from closing, and a hurricane came, and water went in the house.
Got it. Yeah, that
So
happened.
it could have killed the deal, but the lawyers got involved, and the sellers had to pledge all of the flood money to my parents,
That's
to make the deal go through.
right.
So yeah, so that kind of worked out in that situation. But there's a real live example of a storm.
So they got a free rehab. They got a free rehab on it.
That's exactly what happened. Yes.
Yeah. All right, let's go on to another one. So another one is sometimes the sellers did something wrong in their life and they got a lien greater than the funds that they're going to clear from the sale of the house, and they can't figure out what to do to honor that lien to get a clear title. So sometimes that happens. Not often, but it happens. Dale, you've had that happen to you?
I believe I had that once. Have you seen a mechanics lien on a deal?
Yes, a lot.
Yes, that has come up. Absolutely. Yeah.
Yeah.
So
And then
Usually the liens are small enough that they're going to lose the funds from the sale. But right now, because there's so much equity in the house, you're not noticing those problems. But when equity's tight, it's a lot more common than you think.
so
yeah,
the
where
equity,
the seller's got to come to closing with money.
Correct. Correct.
right. So Dale, in that situation, you could have a mechanics lien that's, second in lien position from the mortgage that the sellers have, and combined now they are at or above the sale price.
Yeah.
Right. Yep.
Yeah.
I've had other incidences when, like, maybe the house was passed on by, like, the parents and they died, and it wasn't through probate yet, and that's caused delays. I've had siblings fight. One sibling had to sign off on it, and they didn't know that the house was being sold, and it got to the point where we needed the other person's signature, and you can't get it. So I've seen those types of processes be a problem before. Usually they get worked out, but I've seen fights and problems. I've had to cancel a deal because it didn't go through probate properly. So I had to wait till to go through probate. Another 4 months later, we close it. So there's a lot of like title issues like that, like if inheriting houses, sibling fights, liens, those are all little things that have come up before to kill a deal.
Or
Yeah.
where you have your siblings who inherited a property and the sales price is exceeds maybe where it should be, okay? And then all of a sudden, maybe get a buyer to agree to that, but then the appraisal comes in and it brings it right back down. You got a big fight with the siblings. Well, I don't want to sell it for that. Well, the market's not yielding that, you know? And you got a buyer who doesn't want to pay cash difference.
And there's another good one. The value of the house doesn't come in on the appraisal. That's a really big one.
Yep.
That kills the deal.
Mm-hmm.
So
Yeah.
And that's the realtor. I mean, the realtor should do a market analysis to get a pretty good handle. And we have some tools as loan officers where we can go in and pull up comps, but really that's the realtor's job to help you get a firm grip on that value.
Yeah. Now, if we're talking about new construction homes, right, where you're putting a deal together with a builder, it's 9 months before you actually close and take possession. There's a lot that could happen in those situations.
Yeah.
From the time you're in contract until the time you actually close. And I've seen a lot of those deals go sideways too.
And I think in the next 12 months, we might see some new construction actually be worth less than it was when they bought it. I've seen new constructions are lowering the prices and they're giving a lot of incentives, cash seller credits and stuff right now. They're building inventories. For the first time, we got some inventory increasing. So that's good.
Yeah. Now 2 years ago on those deals, the builders were finding ways to kill the deal because they realized that they could sell it for more than the contracted price that they agreed to 9 months ago.
Right.
So they were trying to find loopholes to get out of it so they could sell it for 50 grand more.
Yeah. If the buyer needed a 1 month extension, they wouldn't give it to them. That deal's dead. You know.
Yeah, well, we've been through that before, where you go through, you ask for a 1 month extension, and then the builder wants $200 a day.
Yeah, right.
Not to be credited at closing either.
Correct.
No, it's a change order of time is what that's called in the construction industry.
Right.
Okay.
Yeah, change order of time. You know, they're carrying the weight of the burden of the financial outlay of the cost of construction. In some instances, they also have a line of credit with a bank that they're paying interest on, right?
Yeah.
So every day beyond the scheduled closing date costs them money in interest.
Yep. All right, I think that's all. I mean, that's enough. I mean, there's 1,000 more things we could talk about. Mortgage rates that aren't on the credit report, credit disputes, but there's so many things that we could go over, but there's too much. There's too much to talk about.
I know.
There's too much. So.
Yeah.
I think we touched on a lot here tonight.
We did.
Yep. Yep. So bottom line summary, be upfront and honest with your loan officer.
Absolutely.
Be wary of those sellers that who knows what's up their sleeve with that house they're trying to sell.
Right. Yeah. Oh, and therefore I also recommend, because in a lot of states it's not customary to have an attorney involved. In a lot of states they not do that. They just take the contract that the real estate agent provides and that's it. And in some instances the contract is not favorable to you.
Yeah.
So you should have it reviewed by an attorney, and that way you're protecting yourself in case someone tries to back out, or in case you want to and they don't keep your deposit, and all kinds of different things. So
in the non-attorney states, the realtor is supposed to watch your back. So really trust your realtor in those states, because that's your attorney. That's the closest thing you got to your attorney.
I agree.
All right. Well, I'd like to thank everybody for watching our video on why houses fall apart. Don't blame me. It's not my fault. And thank you for watching.
yeah. Yeah.
our website will be sponsoring Alex Carlucci dartboards next week. So
Yes.
So
A
we're gonna
picture-
put Eric's website in the down below in the description, Eric Dream Home Financing, and then you'll see us at gustonshow.com on there, and hopefully you guys give us a call if you need a mortgage.
Yeah, and the thumbnail of
happy
the
house
video,
hunting.
the thumbnail of the video is going to be Alex sitting in Dale's old Ford Focus. Yeah.
Thanks, you
All
guys.
right.
All right,
Thanks.
Take care.
All right.
Take care. Bye.
Bye.